and welcome to the Business Standard Morning Show. My name is Ishan Gera and here are the stories for the day.
This is GE Vernova, helping generate and move the energy that will change the world. Welcome to a new era of energy.
Bisleri, India's biggest and most popular packaged water brand, is up for sale. 82-year-old Ramesh Chauhan, who built this brand, is scouting for a new owner who can take forward his legacy. And the news has stirred a wave in the FMCG sector. Several big players are said to be in talks with a veteran industrialist. Tata Group is also one among them. But what will the salt-to-software conglomerate gain by adding Bisleri bottles to its water crate? Our next report by Debhargya Sanyal answers.
Thumbs Up, Maaza, Gold Spot, Limca and later Bisleri. Industry tycoon Ramesh Chauhan is credited with building several well-known brands during the course of his illustrious career. Maaza, Thumbs Up and Limca were later acquired by the Coca-Cola company. Bisleri stayed with Chauhan. Now 82, Chauhan wants someone to take care of the Bisleri brand legacy. According to reports, his daughter is not keen on taking over the business. Among those Chauhan is in talks with is Tata Consumer Products TCPL. Reports have it that discussions are on for a while for a majority stake in Bisleri International for Rs 6,000 crore to Rs 7,000 crore. Bisleri was originally an Italian company created by Felice Bisleri and it entered Mumbai in 1965 with the packaged drinking water brand. 4 years later, Chauhan and his brothers acquired the company for Rs 4 lakh, according to market rumors. Currently, Bisleri has over 130 operational plants and 4,500 distributors across India and neighboring countries. If the deal goes through, it would be the largest deal in the Indian fast-moving consumer goods space. On Tata's end, analysts say a majority stake in Bisleri would help strengthen its foothold in the beverage segment if it uses the Bisleri name to expand its drink portfolio.
For Tata's, this means that there is an upper end portfolio which is sitting right at the top of the pyramid, which is Himalayan. And then there is yet another which sits at the bottom of the pyramid, if not at the middle of the pyramid, which is Bisleri. So the logic is strong. One is a volume market, the other is a value market. And Tata Consumer Products Limited has the ability to leverage not only the existing brand category, Bisleri, into water, but also has the ability to possibly cross-leverage the Bisleri brand across category. And Bisleri is a door opener. Bisleri has distribution reach, which is different. Bisleri has institutional reach, which is deep and wide. So, there's plenty of possibility with Bisleri.
Gaurav Maurya, chairman of Franchisee India Group, also believes that the acquisition will be a golden opportunity for Tata's to expand its general distribution portfolio. They have already built a successful portfolio in the hotel and catering segment, or HoReCa, with Himalaya.
So Tata has been successful in the HoReCa part of it. The Himalaya piece has been a good HoReCa, but they have not been very good at the GT consumption, which is general distribution. And Tata has a very large GT portfolio, from tea to other things and so on and so forth, from salt to anything. With this coming in, this would give a huge push to their GT value.
Vishal Gutka, Vice President of Research, Consumer and Retail Sector in Phillip Capital India, had earlier told Business Standard that the trade margins in packaged water are very high. It is around 30 to 35% between the distributor and the retailer. But there is a lot of competition from regional players too. Indeed, Acquiring Bisleri does not come without its challenges for the Tata brand. Bijur explains.
I must also warn about one big downside that brand Bisleri has. And that downside is that Bisleri is packaged in a material which is not friendly to the earth. And hey, listen, that is a large volume footprint that is being left behind by brand Bisleri. And I think, managing that is going to be a nightmare in the future for the Tatas, because the Tatas can never be seen to be leaving bad footprint on the earth, and particularly in such a rampant and major manner. That is the soft underbelly of this acquisition.
Maria doesn't believe the environmental concerns would be that worrisome for Tata. Instead, he points to other challenges.
So if you really see the PET space, there is a very clear government guidelines saying that every company which is using any form of plastic, which is large companies, it might be Coca-Cola, Pepsi, Barley, and so on and so forth, would have to bring 30% of recycled back to the system. Eventually, the plastic, which is non-recyclable plastic, would have to be banned. And this would be a policy decision which is not for one company or XYZ company. It is not Tata or a Parle or XYZ. It can be a local company also. It would come to everybody. Challenge is the integration of Bisleri business within Tata operations, which is very complex, because Bisleri as a product, water as a product, is a very local, hyper-local business. So it's a very complex business designed very uniquely, understanding India.
The deal, if it goes through, will help Tata's expand its presence in the beverage sector by capitalizing on Bisleri's massive brand recall and complex distribution network.
An altogether different kind of race is meanwhile going on in space. India too is trying to land a spot there. After government-controlled ISRO, the country's private sector too has made a move. India's first privately developed rocket, Vikram S, blasted off earlier this month. Some called it India's SpaceX moment. But will it be? In our next report, Bhaswar Kumar tells how India's commercial space industry may well become a technology powerhouse and taste commercial success.
The successful launch of Vikram S, India's first privately built rocket from startup Skyroot, is an early example of the benefits of opening up the space sector to private enterprises. For India, it may be as momentous an event as the 2008 launch of the SpaceX Falcon 1 rocket was for the US. For the Indian startup, it is a stepping stone towards more ambitious projects. It is also proof that greater private-public cooperation is the way forward in this sector.
With this mission, we have flight-proven several critical technologies that go into our Vikram series of space launch vehicles, such as avionics, propulsion systems, carbon composite structures, and thermal protection systems. This milestone would not have been possible without the great support we received from ISRO and InSpace, who worked with us hand in hand throughout our journey.
The global commercial space market is worth $360 billion and is expected to grow to $500 billion by 2030. While India's market share is just about $7 billion, private participation, wedded to ISRO's demonstrated capabilities, could boost this share to $50 billion or roughly 10% by 2030. Global opportunities are plenty as well. The number of man-made satellites in orbit is expected to grow over 11 times by 2032. That means over 50,000 satellites will be launched in the next 10 years, the majority of which will be in the lower orbit. These numbers indicate where the sector needs to focus its energies.
I feel the orders what ISRO gets for the satellite, commercial satellite launching, without much delay, maybe 2 years, 3 years, or maximum 4 years. Yes, some of the orders, the private entrepreneurs will be able to capture. That is the way only, we can get the market. The smaller launch vehicles where the 100 kg, 200 kg type of satellites can be launched for remote sensing purposes. That kind of smaller remote sensing satellites, probably the entrepreneurs can capture the market without much delay. And if they have sufficient money to pump it. But funding is a must.
And the private space sector appears to be taking its cues accordingly. Skyroot, for example, is planning its first commercial launch next year, when its Vikram 1 orbital vehicle will place commercial satellites in low Earth orbit. Once that milestone is crossed, Skyroot plans to start mass production with a target of 1 to 2 launches a month by the end of 2025. Indian corporates are also interested. For example, ISRO is inducting a batch of launch vehicles that are being built by a consortium of Hindustan Aeronautics and Larsen & Toubro. This is the first instance where an entire rocket is being built outside the agency with transfer of technology from ISRO. The industry's growth potential has also caught the attention of investors. At $108 million so far in 2022, funding for Indian space startups has increased over 60% as compared to 2021. Out of the $245 million that the sector has received in the past 7 years, around 81% came post-2020, after the sector was opened up for private players. That's what data shared by the Indian Space Association had to say. But that may not prove to be enough, since the space tech sector is capital intensive and projects have long gestation periods. Along with patient private capital, public money and government contracts at the early stage may also be needed. For example, a Space Angels report has found that US space companies received over $7 billion in investments from their government between 2000 and 2018. Consider SpaceX. The report highlighted that during its first decade of operation, SpaceX had $1 billion at its disposal, about half of which came from government contracts from NASA.
The government giving subsidies, definitely there will be limitations. How government can give subsidy? Government can make, as I already explained, government can permit our present contractors to support these entrepreneurs. That is one thing. Second thing is the launch facilities, what the ISRO owns, can be given at a very subsidized rate for them to come and launch.
Under its public-private cooperation model, NASA tenders all its manufacturing to the private sector. It even tenders innovative designs out according to its own specifications. The reusable Falcon 9 rockets from SpaceX are a result of this policy. All the designs for NASA's Artemis mission, which will send a manned mission to the moon, are also being developed through private research and development. While changes in policy envisage technology transfers from ISRO to private players, ultimately, the adoption of a model similar to NASA's could turn India into an aerospace powerhouse.
Let us move on to markets now. After more than a year, the benchmark S&P BSE Sensex Index logged its fresh lifetime high last week. The index has rallied over 20% from its 52-week low, led by metals, financials and FMCG shares. The NSE Nifty 50, meanwhile, is hovering near one-year highs. Do these sectors have enough legs to take the indices further higher, or is it time for the sector rotation? Our next report takes a deep dive.
The S&P BSE Sensex hit a fresh all-time high of 62,448 last week after minutes of the US Federal Reserve's November meet hinted at a possible slowdown in the pace of interest rate hikes in months ahead. The NSE Nifty 50 2 came within a kissing distance of its summit but fell short by about 70 points. Last week's rally lifted the Sensex by 631 points and the Nifty by 205 points. From the June lows, the rally has pushed the Sensex index higher by 21% and the Nifty index higher by 20.5%. Among sectors, the Nifty Metal climbed around 37%, Nifty Bank 32%, and Nifty FMCG 20%. On the flip side, Nifty Auto underperformed the frontline indices as it gained 18%, Nifty Realty 17.8%, and Nifty Oil and Gas and IT indices 12% each during the period. Going forward, G. Chokalingam of Economics Research believes the select underperformers may see increased investors' interest while certain outperformers trading sideways.
The rally in IT should continue. I mean, we can see much more rebound because it was punished beyond what expected. Even before they crashed, the exports are growing only in single digit. Exports are growing only in single digit in dollar terms. So that single digit growth continues, but the stocks have come down 30 to 45%. That is because of meltdown in the Nasdaq. But Nasdaq stocks the profile is different from Indian IT stocks. They are into products and they are earning from other countries. So the dollar appreciation impacts them. Whereas here we are into services. Dollar depreciation is supposed to help them. So valuation also has become attractive. So IT will continue the rally. And metal, I won't say rally, but some recovery is possible because slowly the metal prices are also improving on LME. And banks also, the rally should continue because the credit growth is continuing at around 16-17% year on year. And this is happening after net NPA has peaked out and started falling in the last 2 quarters. FMCG would be stable. I don't think they will rally in a big way because the valuations are already stretched.
At the index level, analysts expect the markets to witness Santa rally in December, albeit at a slower pace on the back of improving economic environment and anticipated slowdown in rate hikes.
We expect that the market will see a year-end rally this time because we are seeing that the central banks are slowing down on the interest rate hike cycle, and that will give confidence to the market. And also the economic parameters along with the so many data. If you see the PMI data of manufacturing and services sector, then the core sectors growth along with the inflation coming down across India and globally also, and the crude oil hovering around $85 per barrel. So all these kind of data are pointing out that the market is gaining some kind of a confidence, and some inflows from the SIP and DIIs will give the market an upward direction move.
The monthly F&O rollover data indicates that the Nifty could reach near the 19,000 mark in the December series. According to a report by IIFL Research, seasonality trend of the last 20 years for the month of December shows that Nifty has 80% probability of closing in the green. This December, our target for the index will be 18,900 with key support placed at 18,100. That said, the market shall seek direction from the Q2 GDP and infra output data this week. Besides, global cues and foreign flows will dictate the market trend.
The stock of Bharti Airtel hit a 52-week high early this week on the back of 5G rollout, the tariff hike in the 2 states, and an impressive 89% jump in its net profit. Its average revenue per user, or ARPU, also shot up 190 rupees. Telecom companies, media platforms, and firms in several other sectors often cite ARPU or ARPU numbers to flaunt their performance. We decode it for you in our next segment.
What's the one metric to ascertain the performance of a telecom operator? Well, industry players turn to ARPU or ARPU for quick reference. ARPU stands for average revenue per user. It is the revenue generated usually by telecom companies per connection over a period of time, say monthly or yearly. The metric is used by companies offering subscription services, including internet service providers and hosts. It is used to calculate the revenue generating potential at the per customer level. ARPU is calculated by dividing the total revenue of the telecom operator by a total number of users or subscribers. It is a trackable measure and plays an important role in measuring the company's realization per user. ARPU is calculated to ascertain the profitability of the company. It is also used for comparison between various telecom companies. Higher ARPU indicates a better financial position for the company. An increase in the ARPU shows an improvement in the monetization of the user base. ARPU is also calculated by social media companies like Meta and Snap. A higher ARPU usually means a higher valuation for the company. Currently, Meta has the highest ARPU of all social media platforms. ARPU makes it easier to compare two or more competitors for analysts, policymakers, and companies. It also indicates business strengths and weaknesses. Moreover, the company can make changes to its tariff plans and other costs after analyzing ARPU. If ARPU is presented without details, it is largely meaningless for policymakers and companies. Some experts believe that the number can be distorted. If a person has more than one connection, the ARPU figure may not present a true picture of the company's penetration. ARPU can be increased in several ways. The companies can hike the tariff so that they save more per customer, or they can attract more customers and expand their user base. If the company finds a way to improve its user retention, it can reduce customer churn. Customer churn is the number of customers that stop using a service. It is also called customer attrition. Higher the churn, lower the ARPU. At 190 rupees, Bharti Airtel's ARPU is the highest among Indian telecom players as compared to Reliance Jio and Vodafone.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Jio, meanwhile, is still struggling to improve its average revenue per user. It was at 144 rupees in the quarter ending September. Experts say that one of the reasons for low ARPU was Jio's focus on adding more subscribers. That's all for today. We'll be back tomorrow with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.